Hello. Yes, let me check whether my audio and everything okay or not. Yes. Hello. Yes, I think my audio is clear. Fine. We start now. Okay, students. In the previous class, means yesterday night we have discussed issue, forfeiture, and reissue of shares concept. Now, in this session, we discuss bonus and right issue, redemption of preference shares. Along with these two concepts, we also try to solve some problems on the concept of these three things. Three things means issue, forfeiture, reissue of shares, and along with this problem, now sometimes they may also give you bonus and right issue problem and redemption of preference shares also. So from these three concepts or from these three chapters, they may frame one single question. We have that type of questions also. Okay, very important. So don't see these three as separate chapters. Why? Because they are framing one single question by combining all these three concepts. That's why first we have discussed issue, forfeiture, and reissue. Now we discuss bonus and right issue. After that we go with the redemption of preference shares. The evening session, again in the evening we have almost 1.5 to 2 hour session, same 8 to 10. Issue of debentures and redemption of debentures we discuss. With this our company accounts gets completed. And here my humble request to you people is, what you will do is, while watching this video, try to open your study material, and study material 3 content you can refer, and at the same time please refer the problems whatever the study material you have, or you have any summary notes. So just open that notes and quickly revise the theory content along with me. And while I am solving some problems, you also try to solve the same problems. If you can solve the same problems, now you need not to solve them once again. Means here revision come your preparation also gets completed simultaneously, because we don't have much time now to revise the concepts once again. Tomorrow we have exam. That's why. Okay, so open the study material and whatever the resources you have, to put it simple, whatever the resources you have on the concept of bonus, right issue, and redemption of preferences, try to revise them. Okay, right. Now we start first about bonus and right issue. To get first, we discuss about bonus shares. This is very simple concept, but little bit you can understand the logic behind this problem, na, then it is easy. Yeah, Satvika, I already said debentures or issue of debentures and redemption of debentures we discuss in the evening session. Now in this session, wholly we discuss about bonus, right shares, and redemption of preference shares. At the end, we try to solve some problems on the concept of these three things. So here I have taken some previous year exam questions from May 24, means June 24, May 24 or June 24. From this till September 25. Till September 25 attempt, whatever the, sorry, 26, till September 26 attempt, whatever the questions we have in the exam, we have get the questions in the exam. So I have taken all these things. We quickly revise these questions also. Okay. Debentures concept we discuss in the evening session. That's it. Now look at bonus shares. So here first we try to understand what is the bonus shares. See, bonus shares are nothing but shares of a company issued to the existing shareholders at free of cost. So why these bonus shares are issued, all these things I'm not discussing now. Why? Because it's a quick revision class. So I repeat once again, this is not in-depth class. So here whatever I discussed, that is from exam point of view. Please make a note of it. Right. So what's the meaning of bonus share? Bonus shares are equity shares, not preference shares. We have two types of shares now, equity and preference. Yes, sir. Bonus shares means think always about equity shares. So equity shares of a company issued to the existing shareholders, not to the new shareholders, existing shareholders, by the company at free of cost. So here company will not receive even single rupee for issue of these bonus shares. So these are called bonus shares. So bonus shares are given to existing shareholders only, do remember. And bonus shares are offered to existing shareholders in a ratio, in a particular ratio. So these shares are offered to the existing shareholders based on their holding, shareholding pattern. Suppose here I have given one ratio, look at 2 is to 10. So what is the meaning of 2 is to 10? The company is going to issue 2 bonus shares for every 10 shares held by them. I repeat, 2 bonus shares for every 10 shares held by them. 2 is to 10. So first 2 is nothing but bonus shares. Next 10 is nothing but existing number of shares. Is it clear, students? Yes, sir. Suppose Mr. A is having 1 lakh shares, 1 lakh shares in the company. So in that case, how many bonus shares he will get? 1 lakh into 2 by 10. 1 lakh into 2 by 10. So he will get 20,000 bonus shares. 20,000 bonus shares multiply with the face value. Multiply with face value. And do remember, bonus shares are issued at face value. Bonus shares, 99.99% of bonus shares are issued at face value. In a rare case, the bonus shares are issued at premium. Okay. And because of this bonus shares, there are no new funds comes into the organization. Do remember. So bonus shares is also called as capitalization of profits. It is important for true or false statements. So bonus shares, issue of bonus shares also called capitalization of profits. Next. Yeah. And one more important concept is, if in the examination problem, check whether all the existing shares are fully paid or not, because bonus shares are issued only when the existing shares are fully paid. I repeat, bonus shares are issued only when the existing shares are fully paid. You may ask a doubt, sir, if the existing shares are partly paid, then what we do? First, make the final call. Make the final call. We have some problems based on this concept we discuss. Make the final call. Make the existing shares into fully paid shares. After that, issue bonus shares. After that, issue bonus shares. Okay. So here company may give bonus to the existing shareholders in two ways. One is issue of fully paid bonus share. Issue of fully paid bonus share. So what is the meaning of issue of fully paid bonus share? Nothing but, suppose the face value of a share is equal to 10. Face value of a share is equal to 10. Company is issuing one share of rupees 10 each to the existing shareholders. They are not going to collect even single rupee from the shareholder. This is called issue of fully paid bonus share. Fully paid, face value 10. Company should also record the entry for 10 rupees. Fully paid. Issue price, I mean face value 10, called up value 10, paid up also 10. This is called fully paid bonus share. Sometimes to make the existing shares into fully paid, I repeat, sometimes to make the existing shares into fully paid, the company may also give bonus. There we call it as bonus, not bonus share. Here is bonus share. In this situation, it is just bonus. Do remember, it is nothing but for converting partly paid shares into fully paid. This bonus is given to the shareholders for converting partly paid shares into fully paid. Actually, when I make final call, then shareholders should pay that amount in cash. Instead of, sometimes companies, instead of collecting that amount in cash, the company may issue bonus, not bonus shares. Bonus is different. Bonus shares are different. Bonus shares means bonus is given in the form of shares. But here we are giving bonus for what purpose? For converting the partly paid shares into fully paid. These are not called bonus shares. This is just bonus, to remember. Then what is the entry we record for bonus, sir? First, on making final call, we know what is the entry for making final call. Yes, sir. Share final call account debit to share capital account. Now, next, now we need bonus. Now, sir, how can we take bonus? The shares or bonus is free from shareholders point of view, but what about from company point of view? Company point of view, it is not free. Company should arrange some amount for bonus. Do remember. So how the company will arrange the bonus? Company will take amount from reserves. Amount from reserves. Do remember. Company will take amount from reserves. Here we have two types of reserves. One is free reserves. Second one is capital reserves. Capital reserves. Free reserves and capital reserves. Company will always give bonus from free reserves, not from capital reserve. For example, capital redemption reserve is there. Out of the capital redemption reserve account, we should not allow to issue bonus. Securities premium. Securities premium account balance is also not used for issue of bonus. Revaluation reserve. Revaluation reserve is also not used for issue of bonus. Why? Because these are not free reserves, these are capital reserves. Okay, so whenever the company would like to give bonus now, they always use free reserves. Free reserves means what, sir? For example, general reserve, profit and loss account, profit and loss account balance, retained earnings account balance, or any other reserve which is available for distribution of profit. In the examination problem, majority cases they give you general reserve and profit and loss account balances as free reserves. Remember till there. Now, issue of bonus. Issue of bonus. Calculate how much amount of bonus we have to pay. Let us say, for example, I need 1 lakh rupee to convert the partly paid shares into fully paid. In that case, how much amount you need? 1 lakh you need. So, arrange this 1 lakh first. Take this amount from various free reserves. General reserve, profit and loss account, any other reserve given in the problem. To bonus to shareholders. Simple. After that, adjusting the bonus. Whatever the bonus we have arranged, this is adjusted against the final call. Normally, on making final call, we have to receive amount, bank account debit to share final call. But here we will not receive amount, we adjust the bonus entry. Bonus to shareholders account debit, bonus to shareholders account debit to share final call account over last entry. So these three entries are recorded for converting the partly paid shares into fully paid. Suppose company is not giving any bonus for this. Company is not giving any bonus. In that case, we collect the amount from shareholders. Yes, sir. In that case, what is the entry we record? Bank account debit to share final call account over. After making final call, now the existing shares become fully paid shares. Fully paid shares. Existing shares are converted into fully paid shares. Now the company is ready to issue the fully paid bonus shares. Clear? So fully paid bonus shares are taken from which reserves, sir? Fully paid bonus shares may be given by the company either out of capital profits or out of free reserves. Any reserve means free reserve or capital profits or capital reserves. But here we have some sequence of reserves, sequence of account balances which are used for issue of bonus shares. To remember in the exam also, please follow the same. Okay, now look at first one. Capital redemption reserve account balance. Capital redemption reserve account balance you take. Why, sir? See, capital redemption reserve account is created when the preference shares are redeemed or when the capital is redeemed. When the capital is redeemed, preference shares or equity shares in case of buyback, we create capital redemption reserve. Whatever the reserve we created, na, capital redemption reserve, this is used only for the purpose of issue of fully paid bonus shares. Only for the purpose of issue of fully paid bonus shares. That's why first we use, whenever we are issuing fully paid bonus shares, first and foremost account we use is capital redemption reserve account balance. The first one. Second one, securities premium account balance. We have section 52. In section 52, they mention for which purposes the securities premium account balance is used. There are total 5 purposes. Out of them, one of the purpose is securities premium account balance can be used for issue of fully paid bonus shares. Fully paid bonus shares. Do remember. Here we have an important concept. Here we have an important concept. Look at what is that important concept, sir? First, observe the company name. Observe the company name. Here students will get little bit confusion. Observe the company name. So here we have two types of company. One is private limited. Next one, public limited. Okay, just a minute. Sorry. Not private, public. Listed company and unlisted company. Listed company and unlisted company. Unlisted company. Unlisted company may be either private limited or public limited, whatever it may be. The public limited means it may be listed or unlisted, but private limited companies are not listed. Public limited. Okay, first this you have to check. Company name is given, yes sir. Check whether it is a listed company or unlisted company. Sir, how can we know that, sir? If it is specifically given listed company, assume it is a listed company. Not assumption, it is a listed company. If it is not specifically given as a listed company, now assume it is an listed company. I repeat, assume it is an listed company. It is a listed company. I repeat, first one, company name is given. In the bracket they said listed company. It's a listed company. Yes sir. Company name is given. They did not mention anything about the company, whether it is listed or unlisted. Assume it is listed. You have to write your assumption. And they have given company name and they said it is unlisted. Yes, it is unlisted. I hope you understood. Yes sir. Why sir? Why? Because unlisted companies will utilize securities premium only when it is collected in cash. When collected in cash. When collected in cash. When collected in cash. Securities premium is used only when it is collected in cash. If it is not collected in cash, don't use it. Sir, collected in cash means what, sir? Suppose shares are issued to the public for cash at a premium. Means public will pay amount to us. Yes, sir. Premium amount public will pay. Yes, sir. Now, shares are issued for other than cash. Suppose I have purchased asset and I issued shares at premium. Means here I am not collecting any amount. I have issued asset. Sorry, I have purchased asset and issuing shares. Means I am not receiving money. So all the listed companies can utilize securities premium for issue of fully paid bonus shares only when amount is collected in cash. When amount is not collected in cash, don't utilize the securities premium for issue of fully paid bonus shares. Very, very important. In case of unlisted company, in case of unlisted companies, means securities premium can be utilized. Securities premium can be utilized for issue of fully paid bonus shares. This condition you have to remember. That's it. So that is the second one. So first one, capital redemption reserve. Second one, securities premium. Third one, capital reserve. Capital reserve also, it is, if it is realized in cash, then only utilize. Otherwise, don't utilize. Capital reserve. In the problem, they will mention capital reserve. In the brackets, they give you realized in cash this much. If nothing is given, assume it is realized in cash. Assume it is realized in cash. Logic simple. So bonus shares are not that much of easy. Here there are some assumptions to remember. After this, if the amount is not sufficient, if the amount is not sufficient, utilize the general reserve account balance. General reserve, fourth preference. Even after this, amount is not sufficient, utilize profit and loss account balance. Over. 5 reserves try to utilize. First, CRR. Second, securities premium. Third, if you want to utilize securities premium, check whether the company is listed or unlisted. If it is listed, check whether the word collected in cash is given or not. We solve some problems now, then you can understand. Next one, general reserve. After that, P&L account. After that, bonus to shareholders. Simple entry. First and foremost entry. This is the entry we have to record. To record this entry, first calculate how many number of bonus shares we issue. Number of bonus shares to be issued. How many number of bonus shares we issue. So number of bonus shares to be issued. How to calculate? Number of bonus shares. Number of bonus shares. Number of bonus shares to be issued. Is equal to existing shares. Into bonus ratio. Existing shares into bonus ratio. Check how many existing number of shares we have into bonus ratio. We get bonus shares. Number of bonus shares. Next, bonus amount. Bonus amount is equal to number of bonus shares. Number of bonus shares into face value per share. Over. You can calculate these two steps now. Bonus shares completed. First, existing number of shares into bonus ratio. You get number of bonus shares to be issued. Next, bonus amount. Bonus amount is calculated as number of bonus shares into face value per share. Face value per share over. This is the simple concept of bonus shares. Okay, now look at. We try to solve some concepts. Do remember these entries? For issue of fully paid bonus shares, first and foremost entry for bonus to shareholder, utilize capital reserve, securities premium, capital CRR, capital redemption reserve, securities premium, capital reserve, general reserve, and P&L account balance. After that, issue bonus shares. Entry simple. Bonus to shareholders account debit to equity share capital account. Final entry. So for issue of fully paid bonus shares, two entries. For converting the partly paid shares into fully paid shares through bonus, three entries. Through bonus, three entries. If final call is received, two entries. Final call is received, two entries. Please do remember this concept. Right. Now, look at some problems on this concept. Yes. See, first look at this problem to understand the basic idea behind bonus shares. Look at illustration 1. Observe. Following items appear in the balance sheet of Bharat Limited. In the brackets, they are giving listed company. What is the importance of this word listed company? Look at the securities premium. If it is collected in cash, then only use for bonus shares. Otherwise, don't use it. As on 31st March 2022, look at 40,000 equity shares of 10 each. 40,000 equity shares of 10 each means, are they fully paid or partly paid? Fully paid, sir. Existing number of shares we have 40,000 into 10 rupees each share means fully paid shares. Capital redemption reserve we have 55,000. Securities premium in the brackets they have given, look at collected in cash. Listed company, securities premium collected in cash. Now securities premium is utilized for issue of bonus shares. Next, how much we have? 30,000. General reserve we have 1,05,000 rupees, and surplus. Surplus is nothing but P&L account balance, or you may call it as retained earnings account balance also. Okay, 50,000. This is just information. Next, the company decided to issue to equity shareholders bonus shares at the rate of 1 share for every 4 shares held. Can you tell me the ratio? 1 is to 4. 1 is to 4 means 1 share for every 4 shares held. And for this purpose, it decided that there should be minimum reduction in free reserve. Free reserves is nothing but general reserve and profit and loss account balance. Past necessary journal entries. Now, you people tell me, is this problem on the concept of bonus share or bonus share or bonus means for converting partly paid shares into fully paid? First scenario bonus shares means two entries. If it is bonus na, then three entries. Is this logic clear? Yes, sir. Now look at, tell me, what is the first step we try to calculate? First, calculate number of bonus shares to be issued. After that, calculate bonus amount. Look at, first we try to calculate number of bonus shares. Simple. Existing number of shares are 40,000 into ratio 1/4, that is equal to 10,000 bonus shares. 10,000 bonus shares multiply with the face value. Face value is how much? 10, sir. Means how much bonus amount we need? 1 lakh, sir. How much bonus amount we need? 1 lakh. 1 lakh bonus amount we need. So how to arrange? I said first utilize capital reserve. I am using capital reserve 55. Still how much amount I need? 45, sir. Still how much amount I need? 45. But whereas securities premium account balance, how much we have? 30,000. 30,000 securities premium account balance. Still we need how much? 15,000. This 15,000 you can utilize from general reserve. Follow the sequence. First CRR account balance. After that securities premium. After that general reserve. Over. Is it clear, students? Yes. First record the entry for this. What is the entry? Capital redemption reserve account debit 55,000. Securities premium account debit 30,000. General reserve account debit 15,000. To bonus to shareholders 1 lakh. Now issue bonus shares. Bonus to shareholders account debit to share capital account, equity share capital account. Over. Two entries. Simple problem. Don't expect this type of problem, but this may be given as a concept. One of the adjustment in the major problem. our main problem, right? Now look at illustration 2. These are various situations of issue of bonus shares. We'll discuss. Past journal entries in the following circumstances. First, a limited company with subscribed capital of 5 lakh consisting of 50,000 equity shares of 10 each. Called up amount 7.5 per share. A bonus of 1,25,000 declared out of general reserve to be applied in making the existing shares into fully paid shares. These are independent situations. Do remember, independent situations. Now look at, observe carefully. First, identify whether this problem is on the concept of bonus shares or bonus. Look at, first, existing shares are partly paid. Existing shares are partly paid. Now the company announced bonus of rupee 1,25,000 for converting the partly paid shares into fully paid. Now you can calculate how many number of shares we have. 50,000, sir. What is the unpaid amount or uncalled amount? Uncalled amount is 2.5. Uncalled amount is 2.5. So that how much amount we are getting? 1,25,000 rupees. 1,25,000 rupees. This 1,25,000 is used for what purpose? Bonus shares or bonus? Bonus, sir. Bonus means how many entries we record? 3 entries. Tell me, what is the first entry? Share final call account debit 1,25,000 to share capital account 1,25,000. After that, we arrange for bonus. So bonus here, which reserve is used? Nothing given. Oh, yeah, sorry. It is given now from general reserve. They said they have taken 1,25,000 from general reserve. Yes, sir. Then what is the entry we record? General reserve account debit to bonus to shareholders account. Now this bonus adjust against the final call. Bonus to shareholders account debit to share final call account. Over 3 entries for first one. These are the 3 entries. Understood, students? Very easy. Next one. So only you need conceptual knowledge. You have concept here, no confusions. If you are having confusion means no clarity on the concept. That's it. Now second one, look at a limited company having fully paid up capital of 50 lakh consisting of equity shares of 10 each. 50 lakh divided by 10. How many shares we are getting? 5 lakh share. Had general reserve of 9 lakh. So we have 9 lakh rupees general reserve account balance. Yes, sir. It was resolved to capitalize 5 lakhs out of general reserve by issuing 50,000 fully paid bonus shares of rupees 10 each. Fully paid bonus shares. Fully paid bonus shares. In the previous one, they have given bonus. There is a lot of difference between bonus and bonus share. So here we have to make a difference. Okay. Each shareholder to get one such share for every 10 shares held by him in the company. See, we don't need this information now. Why? Because we know how many shares are issued. 50,000. What is the bonus amount? 50,000 into 10, 5 lakhs. Direct calculation. 5 lakhs amount we need. They said utilize general reserve. How much balance we have in the general reserve? 9 lakhs. Out of 9 lakhs, use 5 lakhs rupee. Yes, sir. What is the first entry we record? General reserve account debit 5 lakhs to bonus to shareholders 5 lakhs. After that, issue bonus shares. Bonus to shareholders account debit to equity share capital account 5 lakhs. Over 50,000 bonus shares at the rate 10 each. That's it. Very simple problem. Next, yeah. This is very important model. Important model of problem. Important model. Okay, so in this problem we have two concepts, bonus and bonus shares concept. So we'll discuss this problem and the remaining problem in this chapter na same problem. And we have one more important model of problem, that is it consists of bonus and right shares. Bonus and right shares. After completion of this problem we discuss about right shares. After that we go to that problem. Clear everybody? Yes, sir. Yeah, I hope you are following, students. If you have any doubt you can post your query in the chat box, then I will try to reply it. Now look at illustration 3. Very important model of problem. Observe carefully. Here they are giving information about balance sheet, liability side. Liability side information. Observe carefully. Following notes. Following notes. It is not balance sheet. It is notes. Notes to the balance sheet. Okay. Notes pertain to the balance sheet of Solid Limited as at 31st March 2022. Observe carefully. Authorized capital. Authorized capital 10,000, 12% preference shares of 10 each, 1 lakh, 1 lakh equity shares of 10 each, 10 lakhs. What is the total authorized capital we have? 11 lakh. Company may issue the total amount of capital 11 lakhs or company may issue part of the amount. Okay. Now look at issued and subscribed capital. Issued and subscribed capital. See, here we have total 8,000 preference shares. Out of them we issued only 8,000. 10,000 preference shares we have. Out of them we issued 8,000. 1 lakh equity shares we have, but out of them we issued 90,000 equity shares. Okay, sir. 8,000 shares we issued, fully paid. 90,000 equity shares we issued, but partly paid. Face value 10, but paid up value is only 8. Means 2 rupees company has not made for final call. Okay, sir, fine. Reserves and surplus information they are giving. We have general reserve, revaluation reserve, securities premium collected in cash. So here, solid limited given, but whether it is listed company or unlisted company, nothing is given. But here the word securities premium is given, the account, and in the bracket they said collected in cash. You can assume solid limited as unlisted or listed, irrespective of the nature of company, whether it is listed or unlisted. Securities premium collected in cash now. You assume it is listed, you can utilize securities premium. If you assume it is unlisted, even though you can utilize securities premium. So it is better to assume solid limited as a listed company. Okay, fine. Profit and loss account balance we have 2,05,000 rupees. First, observe the nature of reserves. Forget about amount. The examination amounts will change, but the concept is same. Next, we have secured loan. 12% debentures we have at the rate of 100 each, 5 lakhs. Okay, it's a liability. Okay. Next, this paragraph is important. On 1st April 2022, the company has made final call 2 rupees on 90,000 equity shares. Yes, here equity shares are partly paid shares. Now company made a final call. Tell me, entry for this final call. Equity share final call account debit 90,000 shares into 2 rupees, 1,80,000 rupees. This is the first entry. So when you read this, immediately draw the format of journal. After that, start recording one by one entry. Over. Next one. The call money was received by 20th April. Look at here. Company made final call. Two possibilities. One, the company may receive amount from shareholders. Two, the company may issue bonus for this amount also. But here the company is receiving money. When company is receiving money, very easy for us. Why, sir? Simple entry, bank account debit to share final call account. Over 2 entries. But if company is issuing bonus means we have to write further 2 entries. Arrangement of bonus, after that bonus adjustment. Okay. So by looking this 1.5 line, we have recorded 2 entries. First entry telling April 1st, equity share final call account debit 1 lakh 80 and capital 1 lakh 80. After that, bank account debit to equity share final call. Now you can observe all the existing equity shares become fully paid. Now the company may issue bonus shares. Observe. Next. Thereafter, the company decided to capitalize its reserves, nothing but bonus shares. By way of bonus, at the rate of 1 share for every 4 shares held. 1 shares for every 4 shares held means 1:4. What is the bonus ratio? 1:4, 1 by 4. How many existing number of shares we have? Tell me. 90,000 existing number of shares we have. 90,000 existing shares into 1 by 4. Nothing but how many number of bonus shares we are getting? 22,500 bonus shares we are getting. Now calculate bonus amount. Nothing but bonus shares into face value of share. If nothing is given, assume company issued bonus shares at face value. If any amount is given, take that amount. But it should be more than face value, but not less than face value. If the issue price is less than face value, then it is not called a bonus share. Okay. If it is more than face value, okay, no problem, because it should at a premium. How much? 2,25,000 rupees bonus amount we need. How much amount we need? 2,25,000 rupees. Now tell me, we need 2,25,000 na. First, I am taking amount from securities premium. How much amount we have in securities premium? 20,000. Now the question comes, okay, check whether revaluation reserve. Okay, it is revaluation reserve. This is another important, revaluation reserve. Revaluation reserve account balance cannot be utilized for issue of bonus shares. Why, sir? See, in depreciation chapter, we have a concept of revaluation of fixed asset, property, plant and equipment. When the property, plant and equipment is revalued, then no money flows into the organization. It is just this account is just open to record the amount of increase. That's it. Don't utilize this account balance. Simple. Next, further we need 2,05,000 rupees. So utilize 1,60,000 from general reserve minus 1,60,000. Still we need how much amount? 45,000 rupees. This 45,000 rupees we can take it from P&L account balance. Tell me, in this problem, what is the sequence? What is the sequence of accounts we use? First, securities premium. After that, general reserve. After that, profit and loss account balance. Over. You get the next entry. Securities premium 20,000, general reserve 1,60,000, P&L account balance 45,000, total bonus 2,25,000. Over. Yes, sir. Now, bonus adjustment. Bonus to shareholders to equity share capital 225, 225. Next. Show necessary journal entries in the books of the company and prepare the extract of the balance sheet immediately after bonus issue, assuming that the company has passed necessary resolution at its general body meeting for increasing the authorized capital. Sir, what is this point, sir? What is this point? Means, look at the problem once. Here, 8,000 preference shares we already issued. Just a minute. 8,000, 10,000 preference shares actually we have authorized, 8,000 already issued. Okay, sir. 1 lakh equity shares we have authorized, but now issued 90. Can you tell me after bonus issue what's the total number of shares we have issued to the public? 90 plus number of bonus shares issued 22,500. Means total bonus shares becomes total shares become 1,12,500. But whereas here authorized we have how many? 1 lakh. I repeat, existing already issued 90. Now we are issuing bonus shares 22,500. Total shares become 1,12,500. But whereas our authorized equity shares are how many? 1 lakh. Issued shares can never be more than authorized shares. That's why here the company first they have to pass a resolution for increase in the authorized capital. So it has to alter the MOA, capital clause. Capital clause. So that's why here they are giving the company has made a necessary resolution for increasing the authorized capital. If this point is not given in the problem, you have to assume that the company has taken necessary action for increase in the authorized capital. Very, very important, students. Very, very important point. Is this logic clear? Yes, sir. Now look at the balance sheet. How the balance sheet is prepared first? Put the heading of balance sheet. Here we have the information about only liabilities. Liabilities side. No other information. Right? So first one, balance sheet heading. After that, equity and liabilities. Equity and liabilities. Actually, this has to be taken here. Shareholders funds. Below that, share capital. Look at the format there. Okay. First equity and liabilities. After that, shareholders funds. Below that, share capital. After that, reserves and surplus. How much of share capital we have? How much of share capital we have? Look at, this is 80,000 as it is. 80,000 as it is. Now 90,000 shares became fully paid now. Yes, sir. Means how much? 9 lakhs. Existing now bonus shares are issued. How much? 2,25,000. This is our total share capital now. 80 plus 9 lakhs plus 225. Okay. Look at, total will become 12 lakh 5,000 rupees. How this 12 lakh 5,000 rupees came? Note. In this problem, balance sheet is very important. Notes to accounts. Share capital. Equity share capital. Look at, first authorized we are writing. After that, issued subscribed we are writing. Here the important point is this line. This line. Compulsorily you have to write this word. Out of the above, 22,500 equity shares are issued by way of bonus. This point we have to mention. Over. Next. Write down reserves and surplus account balance. Sir, how to write reserves and surplus account balance? Look at here. We have general reserve 160. Total amount is used. Yes, sir. Now the general reserve is 0. Revaluation reserve. Nothing is used. The same balance 35,000. Securities premium collected in cash 20,000. 20,000 utilized. Now securities premium 0 balance. Profit and loss account. Total 2,05,000. Utilized 45. Remaining amount 160. So tell me now the total reserves and surplus account shows 160 plus 35. Total 195 balance. Total 195 balance. The same 195 is shown here. That the same you have to show as a working note. Notes to accounts. Next one, non-current liabilities. Below that, long-term borrowings. Here already they have given long-term borrowings na 12% debentures. You write the same. Over. The problem is completed. So students may get little bit confusion by looking at this information. No, read one by one line. Read one by one line. It is enough. Okay. This is our illustration 3. Next. Illustration 4, bonus and bonus shares, same concept, nothing will change. Same concept, nothing will change. Same problem. Try to practice. It's like a practice problem. Next, practical question 2. Practical question 2 also same problem. Practical question also same problem. Look at it. It's like a practice problem, right? Next, practical question 3. This is also same problem. Similar problems, students. Similar problems. Look at. Just reserves and surplus account balances will change. Concept is same. Concept is same. Just the reserves and surplus. Here they have given general reserve, CRR, securities premium, profit and loss account. In this practical question 2, they have given CRR, securities premium, general reserve, surplus. Same. Here they have given general reserve, CRR, securities premium, profit and loss. In these three problems, now securities premium collected in cash. Logic simple. So these problems consider as further practice. Further practice. Now come to next concept, right shares. Right shares. Here students will feel little bit difficult, but don't worry. Look at this concept, right shares. The right shares is nothing but what, sir? The other name for right shares is follow-on public offer. Sorry, before discussion of right shares, we'll discuss about follow-on public offer. See, we have two concepts, initial public offer and follow-on public offer. Initial public offer means what? First time the company is issuing shares in the stock exchange, shares to the public directly through the stock exchange. Initial public offer. After initial public offer, from next time onwards, if company wants to raise more capital from public, I am repeating, from public, next time after IPO, now the company wants to raise capital from public. In that case, company has to give an option to the existing shareholders, because if company issues shares to the public, company receives money, na? Yes. Now before issue of these shares to the, before issue of raising capital from public, company has to give an option to the existing shareholders that, my dear existing shareholders, we are going to offer some more shares or further shares to the public, but directly we are not offering these shares to the general public. First we are giving an option to you. If you people are ready to buy the shares, then you can buy. Actually market price of the share is 100, but we are offering the shares at 95 rupees. 95 rupees. Here the company is giving a right to the existing shareholders. I repeat, existing shareholders. Bonus shares also given to existing shareholders. Right shares also given to existing shareholders. Bonus shares, equity shares. Right shares, equity shares, not preference shares. To remember. Okay. Both options are given only to the existing equity shareholders. When the company issue bonus shares, company receives nothing. It is just capitalization of profit. When company is issuing right shares, means company receive money, but not from the new public. From the existing shareholders only they receive money. These shares are called right shares. So existing shareholders have the right for these shares. Okay, and these right shares also based on their present holding, existing holding in a particular ratio. Bonus ratio 2 is to 10 means 2 bonus shares for every 10 shares held. Suppose if the same ratio is expressed in case of right shares, now then it is called 2 right shares. I repeat, 2 right shares for every 10 shares held. 2 right shares for every 10 shares held. This is right ratio. Okay, now look at. Yeah. Journal entries are easy. Suppose company has given right shares 2 is to 5 means 2 right shares for every 5 shares held. Mr. X is having 1 lakh existing shares. Mr. X is having 1 lakh existing shares. Then how many right shares he will get? 1 lakh into 2 by 5, 40,000 right shares he will get. And right shares are always issued at less than market price. 99.99 cases they issue less than market price. Okay, theoretically, but practically what happens we don't know. Then what are journal entries? Journal entries are very easy, students. These entries are just like when we issue shares to the public, then same entries means bank account debit to share application to share capital. If shares are issued at premium, securities premium. But in the right shares also may be issued either at lump sum, means the issue price may be received in lump sum, or yes, Varunavi Shivam, good afternoon. Okay, so right shares also the issue price of right share may be received in lump sum, or that may be received in installment also. But majority of the problem they give you right shares amount in lump sum. Majority of the problems the company receive right shares amount in lump sum. Then what is the entry we record? Simple. Bank account debit to equity share application to equity share capital and securities premium. 2 entries over. Sir, I will write straight away 1 entry, sir. Bank account debit to share capital. Yes, you can write. bank account debit to share capital to securities premium. You can write, no issues. But write the entry like this, then it is writing two entries are suggested through application, equity share application, and transfer that application money to share capital. Over. Yes, sir. So these are right shares. Now, but the concept comes here when company has given right to the existing shareholders to purchase the shares. Now the shareholder has three options. Shareholder has three options. First option. The first option, right exercise. Right exercise means whatever the right that the company has given to me, I am going to purchase the right shares. Means I am accepting whatever the offer. Generally, company will make these right shares now through an offer letter. Through an offer letter, not for job, for right shares. Okay. So when company has given an offer to me, right shares, if I accept the same, that is called right exercise. That is called right exercise. Okay. So when I am exercising the right, then I have to pay amount to the company. Yes. So we pay amount to the company. Then company will record these two entries. Over. First scenario. Second scenario, second option. This is first option and this is second option. Reject the offer. I don't have money. So I don't want to buy the shares. So that I will reject this offer. I will reject this offer. Reject the offer. No need to pay any amount to the company. Yes. Because I am not accepting the offer now. So I need not to pay any amount to the company. Second option. Third option, we have right renouncement. Right renouncement, and this is very, very important. Sir, what is the meaning of right renouncement? Right renouncement is nothing but company has given me an offer to purchase the shares. Now what I am doing, I am transferring this offer to somebody. I am transferring this offer to somebody. Transferring this offer to somebody, nothing but I am selling the right. Company has given me right. This right I am selling to somebody. This situation is called right renouncement. Right renouncement. When when the right is sold to somebody, then I will charge some amount from him. The existing shareholders may charge some amount from the person to whom the right is renounced. Is it clear? That is called value of right. Very, very important. Value of right. Now the question comes, how much amount I charge from the person to whom I renounced the right? Is it clear? So value of right is nothing but the price which I charge. I repeat, value of right is nothing but the price which I charge from the person to whom I transfer the right. So what's the formula for value of right? Here students may feel little bit difficulty, but understand. So this is just a formula based. If you remember the formula, it is over. Okay, but there is a basic idea behind that. I will also explain the same. So value of right is nothing but this is the formula for value of right. Come right market price per share minus theoretical x right price per share. I repeat, come rise market price per share. Come right market price per share minus theoretical x right price. Theoretical x right price. Come right minus theoretical x right price. So what is the meaning of come right market price, sir? Simple. Market price of share before right issue. Just before right issue. They give you in the problem. Just before right issue, whatever the market price of the share, not face value, do remember. Not face value, market price of the share. Sir, market price of the share is nothing but what, sir? See, market price of the share is nothing but, suppose, here I am typing Reliance Industries Limited. So here, what is the current price we have? 1458. This is called market price. This is called market price. The market price of the share is 1458, whereas face value is how much? 10. Face value how much? 10. Whereas market price is 1458. So market price is different from face value. Is it clear, students? Yes, sir. So just before right issue, what is the market price of the share? That is nothing but come right market price per share. Come right market price per share minus theoretical x right. See, x right market price. See here it is x right price. X right price. X right price means after right issue. After right issue, what is the market price of the share? After right issue, what is the market price of the share? Here try to understand. Come right price we know, but now our focus is on calculation of x right market price. X right market price. Here the theory is, first the theory is, After right issue, I repeat, listen carefully. After right issue, theoretically, as per theory, not practical, theory, the market price of the share may get reduced. I repeat, before right issue, 100 is the market price. After right issue, as per theory, the market price may get reduced. The market price may get reduced. Suppose after right issue, the market price of the share is 98. Before right issue, 100. After right issue, 98. What is the difference? Here we have 2 rupees. Just because I am renouncing the right to in favor of somebody, here I am losing 2 rupees per share. Why? Because before right issue, what is the market price of my share? 100. After right issue, what is the market price of my share? 98. Means after right issue, I am going to lose 2 rupees. Na? I am going to lose 2 rupees. That 2 rupees I will charge from the person to whom I renounce the right. This is nothing but value of right. Now the problem requires how to calculate theoretical X right price. See here we are talking about theoretically, not practically. Practically whether the market price decrease or increase, that is not in our hands. But theoretically they are discussing, we also see theoretically, right? First discuss look at the market capitalization. Market capitalization is nothing but number of shares outstanding into market price per share. Number of shares outstanding into market price per share. Now if you ask the market capitalization of Reliance Industries Limited, look at market capitalization is 19 lakh 72,899 crore. How it comes? Number of shares outstanding into market price per share, you multiply, then it is nothing but market capitalization. So here also, what is the market capitalization? Number of shares outstanding before right issue. Before right issue. Into market price per share before right issue. Okay. Yes, sir. So before right issue, this is my market capitalization. To this add after right issue. I repeat, after right issue, how much amount you received from the market? I repeat, after right issue, how much amount you received from the market? Sir, after right issue means whatever the number of right shares into amount per share na sir. After right issue, how much amount you raised from public? I repeat, after right issue, how much amount you raised from public? Nothing but number of right shares into right price. Yes, sir. So market capitalization plus market capitalization amount plus how much amount you raised through right shares. Add this total amount. Market capitalization before right shares plus amount raised or proceeds from right issue. Add these two. Then total amount we get. Total market capitalization we get. Divided by before right issue, how many shares you are having? 1 lakh, say for example 1 lakh, plus after right issue, how many shares you are having? 10,000, sir. This 1 lakh plus 10,000, 1 lakh 10,000 total denominator. So how to calculate theoretical X right price? Look at, first take market capitalization plus proceeds from right shares, then we'll get total amount. Market capitalization before right issue plus proceeds from right shares divided by number of shares outstanding before right issue divided by number of right shares. Very, very important. Then you get theoretical X right price. Theoretical X right price. Here one example I have taken, and just look at this example. Theoretical X right price. We also solve some problems, one or two problems we have on this concept, value of right. Tell me first, value of right formula is what? Come right market price per share minus theoretical X right price. How to calculate theoretical X right price? Market capitalization plus proceeds from right shares divided by number of shares outstanding before right shares plus number of right shares issued. How to calculate market capitalization? Nothing but number of shares outstanding before right issue into market price per share. This is simple. So logic, all those things here, we don't have much time to discuss all those logics. Clear? Now, based on this concept, we'll try to understand one or two problems. Observe carefully. Actually, this problem is not important from exam point of view, value of right, but sometimes they may give you surprisingly for 4 marks. Then this problem helps us. Look at problem number 5, illustration 5. Illustration 5, observe. A company offers new shares of 100 each at a 25% premium to existing shareholders on 1 for 4 basis. What is the ratio? Tell me. 1 is to 4. 1 is to 4. If I am having 4 shares now, company will issue me 1 share at a 25% premium. So what is the issue price? 125. Face value 100, premium is 25. The come right market price of share is 150. Actually, market price is how much? 150. But the right share issue price is how much? 125. Means company is issuing right shares at less than market price? Yes, sir. Calculate the value of right. Calculate the value of right. Value of right is nothing but the difference between come right market price minus theoretical x right price. What should be the x right market price of a share? Here the total calculation lies in calculation of x right market price of a share. X right market price of a share, how to calculate? Tell me. Market capitalization. Market capitalization is nothing but before right issue number of shares outstanding into market price. But here total number of shares not given. The logic is the total number of shares in the company. Total number of shares in the company not given. But some hint is given. What is that hint? 4 existing shares, 1 right shares. 4 existing shares, 1 right shares. So calculate market capitalization of these 4 shares. So 4 into 4 shares into what is the market capitalization? 150, sir. Less. How much amount we are receiving by issue of right shares? 1 right share we are issuing now. Means how much amount we receive? 125. Divided by. Before right shares, how many shares we are having? 4. After, how many right shares we are issuing? 1. We are calculating average. To put it simple, we are calculating average price of a share after right issue. Before right issue, what is the average? What is the share price? 150. After right issue, what is the share price? So after right issue, calculate the total amount of capital divided by total number of shares. Total amount of capital is nothing but before right issue 150 into 4, 600. Right issue 125 total amount divided by before right issue I have 5 shares. After right issue means I'm issuing 1 right share. Total shares 5. How much? 145 per share. 145 per share. 150 before right issue, 145 after right issue. What's the value per right? 5 rupees. So I will charge 5 rupee per share from the person to whom I renounce the right. Right. So 5 rupees per share. Total amount I charge is when I am having 4 shares. When I am having 4 shares, company is issuing 1 share, right share. Yes, sir. So 4 into 5. Total amount I receive 20 rupees for 1 right share. I repeat. When I am having 4 shares now, then only company is issuing me 1 right share. So what is the total amount I charge for each right share? For each right share I charge 20 rupees. For each right share I charge 20. Very important. Okay, right. Same type of problem we have somewhere else. Okay, you try to solve it. Next we discuss one more important problem. Okay, these are the right shares problem, practical question 4 and practical question 5. Keep this concept in your mind and try to solve it. We solve one problem, bonus and right. This is very important problem. Very important. After completion of this problem, we go for right shares. Regarding CMA classes, you can contact Shrestha team. Okay. Now look at practical question 6. Very important problem. Okay. Now look at following notes pertain to the balance sheet of Mars Company Limited as at 31st March 2022. Right. Look at authorized capital. It is just authorized capital information. 50,000 preference shares and 5 lakh equity shares. Face value 10 each. Next, issued and subscribed. From this, it is very important. We have 5,000 preference shares and we also issued same 50,000 preference shares. Okay, fully paid. Yes, sir. Thank you. Fully paid shares. We have 5 lakh equity shares, whereas we issued only 4 lakh equity shares. Okay. What is the face value? Face value is 10. But what is the paid up amount? 8 rupees is the paid up amount. So here we have 2 rupees unpaid. Now, if this problem is based on bonus and right shares, na? Yes. So to issue bonus shares, I repeat, to issue bonus shares, first the existing shares must be fully paid. For that purpose, make the final call. Yes, sir. On how many shares? 4 lakh shares. Entry equity share final call account debit to equity share capital account. 4 lakhs into 2, 8 lakhs. Over. First entry. Now the question comes whether we receive this 8 lakhs rupee amount or whether the company is issuing bonus. Take it in the problem. Right. Next, look at the reserves. What are the various reserves we have? General reserve, CRR, securities premium collected in cash. Here look at what's the company name? Mars Limited. But they did not mention about whether it is listed or unlisted. But here securities premium collected in cash is given. So assume it is as a unlisted, sorry, listed company. No issues at all. Next, revaluation reserve. Revaluation reserve never be used. Revaluation reserve never be used for issue of bonus share unless some adjustment is given. I repeat, revaluation reserve alone is given. So don't utilize for bonus shares. If some adjustment is given regarding revaluation reserve, then if it is collected in cash, something they given, then use it. Next, profit and loss account balance 16 lakh. Fine. On 1st April 2022. This information they have given on what date? 31st March 2022. Now look at 1st April 2022. The company has made final call of 2 each on 4 lakh equity shares. We know the entry for this. Yes, sir. Equity share final call account debit to equity share capital account. Next, the call money was received by 25th April 2022. The call money was received by 25th April 2022. Means we are receiving money. Entry. Bank account debit to equity share final call account 8 lakhs, 8 lakhs. Now, all the 4 lakhs existing equity shares became fully paid shares. Okay. Thereafter, on 1st May 2022, the company decided to capitalize its reserves by way of bonus at the rate of 1 share for every 4 shares held. Means what is the ratio? 1 is to 4. 1 is to 4. I mean, here dates are very important. First entry date 1st April. Second entry date 25th April. Third entry date 1st May 2022. 1st May 2022 we are issuing bonus shares. What is the bonus ratio? 1 is to 4. How many bonus shares we issue? Tell me. 4 lakhs into 1 by 4. So 1 lakh bonus shares we issue. 1 lakh bonus shares we issue into 10. Means 10 lakhs amount we need for issue of bonus shares. How much amount we need? 10 lakhs amount we need for issue of bonus shares. How do we arrange? Tell me. First we use CRR account balance 2 lakh 40,000. Second we use securities premium 2 lakh 75,000. Still we need how much? Total 10 lakhs minus 240 minus 275. Still we need 4 lakh 85,000. Next we utilize general reserve 1 lakh 60 minus 1 lakh 60. Still we need 3 lakh 25,000. So profit and loss account we have sufficient amount na 16 lakh. Out of 16 lakh utilize 3 lakh 25,000. Over. This is regarding bonus. Yes, sir. It decided that there should be minimum reduction in free reserves. Nothing but general reserve and P&L account balance. This first paragraph is about bonus shares. First paragraph is about bonus shares. Next paragraph is about right shares. On 1st June 2022, the company issued right shares at the rate of 2 shares for every 5 shares held. Means what is the ratio? 2 is to 5. Your student will get a doubt. Sir, first, shall I record entries for bonus shares or shall I record entries for right shares? Follow the dates here. Chronological order. Chronological order is very important. First, which shares are issued? Right shares or bonus shares? Bonus shares. Bonus shares. First, record the entry for bonus shares. After that, record the entry for right shares. Here, one more important calculation. After bonus issue, right shares are issued after bonus issue. Yes, sir. After bonus issue, how many existing number of shares we have now? Okay. Before bonus issue, how many existing number of shares we have? 4 lakhs. Plus bonus shares issued 1 lakh. Now the total shares become 5 lakhs. Before right issue, the number of total shares are 5 lakh shares. Very, very important concept, students. Very, very important. Now, the right ratio is applied on 5 lakh shares, not on 4 lakh shares. But bonus ratio is applied on 4 lakh shares. Bonus ratio is applied on 4 lakh shares. Is it clear, students? Very important. Now, 5 lakh into 2 by 5. Nothing but 1 lakh. 1 lakh right shares we issue. 5 lakh into 2 by 5. A minute. Sorry, 2 lakhs. 2 lakhs bonus shares we issue. Sorry, right shares. 2 lakhs right shares we issue. Okay, sir. What's the amount, sir? 12 rupees. Face value 10. Issue price 12 means premium 2 rupees. Entry. Bank account debit 12 to equity share capital 10 to securities premium 2 rupees over multiply with number of shares. Now, one more important concept is after bonus issue, right issue, how many total issued shares calculate? 4 lakhs plus 1 lakh plus 2 lakh right shares. Total issued shares become 7 lakhs. Total issued shares become 7 lakhs. But whereas, look at the authorized share capital, 5 lakh. Authorized share capital, 5 lakh. So here what is our assumption? Company has taken necessary steps for increase in the authorized share capital. This point you have to write as a note point. Our problem is completed. Now start writing entries. Continue the problem. On that date, at issue price of 12, all the right shares were accepted by the existing shareholders. All the right shares are accepted by the existing shareholders and the money was duly received by 20th June. Now the entry is recorded on 20th June. Show necessary journal entries in the books of a company for bonus issue and right issue. Very simple problem, no complications at all. Only thing is which entries are recorded first, which entries are recorded next. That's it. Okay, look at first look at the problem. Record entries for final call. Next, record entries for bonus shares. Next, record entries for right shares. Problem completed. Bonus shares, I mean final call, 2 entries. Bonus shares, 2 entries. Right shares, either you can write 1 entry, 1 single entry or 2 entries. Total 6 entries. Over. Problem completed. Now look at first entry. Final call to share capital 8 lakhs. Bank account debit to share final call 8 lakhs. Over. Next, bonus shares. Amount we need total 10 lakhs. We are taking CRR, securities premium, general reserve and P&L account balance. Okay. So here some solution is not there. Okay. It is missed. So this is the problem. Simple. Yes, sir. Look, this model of problem is very important. Let me check if we have one more problem on this concept or not. Okay. Here itself I will explain the same type of problem. Okay. Later on we see. Otherwise we'll miss the flow. Let me check same type of problem. No. So bonus shares, right shares, we have only one problem. Okay, sir. Fine. So this is the concept of bonus and right shares, students. Now we'll discuss about redemption of preference shares. Redemption of preference shares. Very important. Redemption of preference shares. Redemption of preference shares. Most of the students they get confusion between in the concept of redemption of preference shares. Why, sir? Why, sir? Look at you can understand. First, can you tell me the entry for issue of preference shares? Entry for issue of preference shares. Simple. Bank account debit. Let us say for example, preference are issued at par to some percentage of preference share capital account. Some percentage of preference share capital account. 1 lakh. This is the entry for issue of preference shares. Now, we have a concept in the Companies Act. Preference shares are redeemed. Preference shares are redeemed within 20 years from the date of issue of preference shares. Means all preference shares must be redeemed. There is no concept of irredeemable preference shares. So what is the meaning of redemption of preference share? The preference share capital is repaid. Preference share capital is repaid within a period of 20 years from the date of issue of preference shares. Okay. So this is the entry for issue of preference shares. Now, can you tell me the entry for redemption? Simple. When we receive amount, bank account debit to preference share capital. When we are paying, na, entry becomes reverse. percentage preference share capital account debit 1 lakh to bank account 1 lakh. Simple entry. Yes, sir. At the time of receipt of capital, entry bank to preference share capital. Now we are redeeming na preference share capital to bank. Over, sir. Sir, where is the difficulty, sir? Yes. Now the difficulties start. Why, sir? First, look at this is what capital. This is capital. Preference share capital. See whether it is equity share capital or preference share capital, whatever it may be, it is share capital now. Yes, sir. Share capital is repaid. Share capital is repaid by the company to the shareholders only at the time of winding up of the company. Share capital is repaid by the company to the shareholders only at the time of winding up of the company. Yes, sir. But here company is not in winding up, but we have a provision in the company's act that these the preference share must be repaid within a period of 20 years. Now the question comes, actually this capital is paid only at the time of redemption, liquidation of company, right? But now the company is not liquidated, but we are repaying the capital. Look at think from outside liability holders point of view. Outside, suppose I have issued debentures or I have taken loan from bank, whatever it may be. Okay, so out of whatever the amount I am having now, actually that amount I have to pay first to the outside liabilities I have to repay first. But without repaying the outside liability, what I am doing, I am repaying amount to the shareholders. I am repaying amount to the shareholders. Please understand this concept. Actually, if the company is having money, it has to first repay outside liabilities. But here we are not repaying amount to outside liabilities, we are repaying the amount of capital, to the preference shareholders. Is this clear? Yes. So here the controversy comes. Now the outside liability holders may question the company, how can you repay the capital before making payment which is due to us? Public may question the same. That's why Companies Act 2013 made some provisions for redemption of preferences. My dear companies, before redemption of preferences, follow these provisions. Follow these provisions. If you can follow these provisions, then you can redeem the preferences without any doubt. Or what are those provisions are? First, check. Only fully paid preference share capital is repaid. Only fully paid preference share capital is repaid. What is the meaning of this? 10 rupees is the face value. All the shareholders paid 10 rupees. Very good. Thank you, sir. Fully paid shares. You can repay. Means if it is partly paid preference share now, then first make it into fully paid, then after you repay. Okay, sir. Second, repayment may be, here I have already written, look at, repayment may be either out of, again why should I write, here we have, yeah, it can be repaid either out of fresh issue of shares. Here what is the problem to the outside liability holders? I repeat, here what is the problem for the outside liability holders? Tell me. Whatever the present money I have, that amount first I have to pay to the outside liabilities. But what I am doing, I am repaying capital. This is the problem for the outside liability holders. Yes, sir. Okay, do one thing, sir. For issue of these shares now, okay, now repayment. Before this point, I will write one more point. Look at, before repayment, first replace the capital which is redeemed. Observe, this point is very very important. Before repayment of before repayment, first replace the capital which is redeemed. Means, suppose I am going to redeem 1 lakh rupee preference share capital. I repeat, I am going to redeem 1 lakh preference share capital. Yes. Now, the same 1 lakh rupee preference share capital you replace. See, I am taking one item from one place. Means that item is missing. Yes, sir. If I can replace this, or if I can replace some item or any item in that place, now, then what happens? It is there is no change. I am taking one item. See, here I am repaying the capital. I am repaying the capital. Please understand carefully. I am repaying the capital. Yes. Before repayment, please replace it. Please replace it. Yes. Preference share capital we have to redeem within 20 years. Very good. Redeem. No issues at all. But before repayment or before redemption, replace the same amount of capital. The same amount or more than that. Simple logic. If you want to redeem the preference shares, yes sir, replace the same amount of preference share capital. Then as a liability holder, as a outside liability holder, we don't have any problem. We don't have any problem. I repeat, if you want to redeem preference share capital, redeem, because Companies Act said na within 20 years you have to repayment. You have to repay the preference share capital. Okay, you repay. The same time replace the same amount of capital. Then as an outside liability holder, I don't have any problem. 1 lakh rupee you are repaying, yes sir, 1 lakh rupee you replace. 5 lakh rupee you are repaying, yes sir, 5 lakh rupee you replace. 10 lakh rupee you are repaying, yes sir, 10 lakh rupee you replace. 1 crore you are repaying, yes sir, 1 crore you replace. Then there is no problem. The first and foremost thing is replacement of capital is very important. Replacement of capital. So here the replacement of capital may be in various forms. Our total redemption of preference share capital revolves in this concept, replacement of capital. Very important. So this capital may be repaid, this capital may be replaced, this capital may be replaced in three ways. One is by issue of fresh shares. When we issue fresh shares, now what happens? We receive capital amount. On one hand we are repaying the capital, on the other hand we are receiving the capital. Some amount of capital is coming, some amount of capital is going. Yes or no? Yes sir. So by issue of fresh shares you can replace the capital. Second, sir, I don't want to issue fresh shares. So fresh shares may be either equity shares or preference shares, whatever it may be. Capital is capital. Capital is capital. Sir, second option, I am not issuing fresh shares, sir. Okay, I repay the amount, or I repay the amount out of profits. I have surplus profits. I have huge amount of profits. The repayment is out of profits. Repayment is out of profits. I am not going to issue fresh shares. Whatever the existing reserves I have, out of those reserves I will repay. In that case, first transfer the reserves account balances to a separate account called capital redemption reserve. I repeat, transfer the amount from reserves to capital redemption reserve account. It is called replacement of capital through reserves, or repayment of or redemption of preference share out of profits. The situation is called redemption of preference shares out of profits. Please understand, students. If you can understand this thin line of difference, then redemption of preference shares is easy. Okay. By creating a new reserve, that is capital redemption reserve out of divisible profit. First, Redemption may be out of fresh shares. When you issue fresh shares, two things: one, cash is coming; second, capital is replacement. Capital is replaced. Second, sir, I am not issuing fresh shares, sir. I have surplus amount. I have sufficient amount in the business. Now, first, what you have to do for replacement of capital, create a new reserve. In the place of preferential capital, a new account is substituted. I repeat, in the place of preferential capital, a new account is substituted. That account is nothing but capital redemption reserve account. Capital redemption reserve account. Is it clear? Or third possibility, either by combining A and B. For some amount na, we issue fresh shares, sir. For some amount na, we create CRR, sir. So two things do remember: replacement of capital. Replacement of capital. Redemption of preference shares talks about replacement of capital. You repay the preference shares, no issues. But the same amount of capital must be replaced either by issue of fresh shares or by creation of CRR or by the combination of both. Okay. Now, at the time of redemption of preference share, arrange the funds for repayment. Yes. On one hand, what we are doing, we are replacing the capital. On the other hand, what we have to see, we need some amount also. Capital replacement is liability side. Capital replacement is liability side. Whereas funds arrangement is on the assets side. Because if you want to repay the capital, we need funds. How the business arrange funds? If sufficient cash is there in the bank now, then out of bank balance they will repay. If sufficient balance is, yes, Sairam, hi. If sufficient amount is not there, in that case, what they will do, they will try to sell some investments, or they will try to sell some assets, whatever it may be. By hook or crook, we arrange the funds. Redemption of preference share talks about only two concepts. One, replacement of capital. Replacement of capital on the liability side. On the asset side, arrangement of funds. Both we have to see. Both conditions must be satisfied. Sir, liability side I will manage, sir. Then how can you pay amount to the preference shareholders? Repayment is nothing but some cash outflow is there na. How can you manage source for repayment? So both the conditions must be satisfied. First, replacement of capital. Second one, arrangement of funds. Very, very important. Next, redemption of preference shares. Redemption of preference shares. Maybe the company may redeem preference shares either at par or at premium. So what is the meaning of this? Suppose the face value of share is equal to 100. Face value of preference share is 100. Redemption at par means company is repaying 100 rupees. 100 face value, 100 repaid. No profit, no loss. 100 face value, 100 repaid. No profit, no loss. But whereas redemption is at premium. Redemption is at premium means 100 rupees face value, but we paid how much? 110 rupee. So there is a loss of 10 rupees. Yes, sir. Observe carefully. Repaid at more than face value means face value 100 I am paying. It's a liability, but extra 10 rupees I am paying. It's a loss. Face value repaid. It's not loss. It is liability repaid. But whereas premium paid, it's a loss because extra amount I paid. And this premium is set off. This premium is set off against P&L account balance. In our CA foundation level, all the problems of redemption of preference share, the premium paid on redemption of preference share is set off against P&L account balance only. To remember, P&L account balance only. Is this logic clear, students? Yes, sir. Look at one example. See, tell me, redemption of preference share may be either at par or at premium. Par means face value 100, repaid 100, no profit, no loss. Premium means face value 100, repaid 110. There is a loss of 10. This loss we set off against profit and loss account balance only. In CMA interlevel, na, they use securities premium account balance, but in CA foundation level, we use P&L account balance. Why, sir? Companies Act provisions. Okay. Now look at example. One example, look at 10,000 redeemable preference shares of 100 each or redeemed at par. Company issued required number of equity shares for the purpose of redemption of 10 each at par, for the purpose of redemption, for the issue price 10 rupees. Tell me how many shares we are going to redeem? 10,000 shares. 10,000 shares we are going to redeem. Means how much capital we have to replace? Tell me. 10,000 into 100, 10 lakhs rupees capital we have to replace. I repeat, how much capital we have to replace? 10 lakhs rupee capital we have to replace. Now how you are going to replace this capital? Tell me. By issue of fresh shares. By issue of fresh shares. Now the question comes, how many shares we issue? How many shares we issue? Look at first, face value of redeemable preference shares, 10,000 into 100, 10 lakh. So this much of capital I need to replace. At the same time, this much of amount I need for payment. Two things should be satisfied. I told you already. One, replacement of capital. Second one, arrangement of funds. Two things must be satisfied. Next, replacement of capital. How much capital we should replace? 10 lakhs. And how much amount we need? 10 lakhs. Why? Because the redemption is at par. Sorry, not this. Redemption is at par. If the redemption is at premium, we need extra amount. If the redemption is at premium, we need extra amount. Yes sir, no students? Yes sir. Now, method of replacement is what? These questions you have to ask yourself. How much of capital I need to replace? 10 lakhs. How much of amount I need for repayment? Capital replacement 10 lakhs. Repayment of capital 10 lakhs. If the shares are issued at premium 110 na, then how much amount you need total? 11 lakh rupee you need. Amount for repayment we need 11 lakh, whereas capital replacement is only 10 lakhs. Capital replacement is only 10 lakhs, but amount we need how much? 11 lakhs. Are you able to follow, students? Yes sir. Now what is the method of replacement? Method of replacement means how you are going to replace fresh issue of shares or creating CRR account or combination of both. In this problem they said fresh issue of shares. This is the method of replacement. Next, number of shares to be issued. Now the question comes, how many number of shares I issue, sir? Simple. How much capital you need? Tell me. 10 lakhs, sir. How much capital you need? Tell me. 10 lakhs, sir. Divided by what is the issue price? Tell me. 10 rupees, sir. 10 rupees face value? Yes, sir. How many shares you have to issue? 1 lakh shares, sir. 1 lakh shares. Over. So if you can issue 1 lakh shares, whatever the capital to be replaced, we get the same. Here the concept comes. Suppose the issue price is 12.5. The issue price is how much? 12.5. Tell me. How many shares now we issue? 10 lakhs divided by 12.5. How much you get? 80,000 shares you get. How much you get? 80,000 shares you get. Here the concept is. Tell me. Look at. I am writing in red color, not red color, blue color. Look at. Suppose in the place of 10, I am writing 12.5. You can understand this now. Concept over. Instead of 10, I am writing 12.5. Issue price is 12.5. So how many number of shares I am issuing? 80,000 shares. 80,000 shares. By issuing 80,000 shares, how much amount you are going to receive? 80,000 shares into 12.5. 10 lakhs rupee. How much amount you are going to receive? Tell me. 10 lakhs. Can you tell me, out of this 10 lakhs, how much is capital and how much is securities premium? Capital is simple. 80,000 shares into 10. This comes 8 lakhs. How many number of shares I issued? 80,000 na? 80,000 into 10, 8 lakhs. Whereas securities premium, 80,000 shares into 2.5, 2 lakhs. Securities premium can never be considered for replacement of capital. I repeat, securities premium cannot or can never be considered for replacement of capital. So in this case, there is a deficiency of 2 lakhs capital. There is a deficiency of 2 lakhs capital. Why? Because I need total capital how much? 10 lakhs. Total capital how much I need? 10 lakhs. But here the issue price is what? 12.5. The issue price is 12.5. So how many number of shares I am getting? 80,000 shares. By issue of 80,000 shares, how much capital you are going to replace? Only 8 lakhs. Only 8 lakhs. whereas the remaining 2 lakhs is for securities premium. In this case, there is a deficiency of 2 lakh capital. Na? This 2 lakh capital we can replace through by creating CRR account. In some problems, we get this concept. 8 lakhs capital is replaced from fresh issue of shares, so that the remaining 2 lakhs is replaced through CRR. But sir, in this problem, how can we solve it, sir? Very simple. Very simple. Suppose if you get this type of problem, na, look at the issue price. Issue price, if it is at par, no issue. If it is at par, no issue. Why? Because how many shares you can issue? 1 lakh shares. By issuing 1 lakh shares, how much capital you are going to replace? 10 lakhs. Because no securities premium. But if the issue price is 12.5, this 12.5 consists of capital and securities premium. In both the scenarios, issue at par or issue at premium, you take face value only. You take face value only. Over. Simple. 10 lakhs divided by 10 face value. How many number of shares you issue? 1 lakh. Suppose shares are issued at premium. 1 lakh shares into, in that case, how much amount you receive? 12.5. Extra amount received, no issue. But capital replacement must. 10 lakhs capital, by hook or crook, you replace 10 lakhs capital. That's it. Over. In this problem, 1 lakh shares. 1 lakh shares. Right? Next. Yeah. You get only fully paid preference shares are redeemed. Yes, sir. In case if we have any partly paid shares, first we convert them into fully paid. If any calls in arrears is there, very important concept here. If any calls in arrears are there, then first, if calls in arrears amount is received, yes, sir, receive the amount, redeem the capital. Receive the amount, redeem the capital. Sir, calls in arrears not received, sir. Very good. Then forfeit the shares. Then start redeeming process. Common sense. Sir, calls in arrears are there. Amount received. Yes, receive the amount. Forfeit. Redeem the capital. Sir, calls in arrears not received, sir. Okay. Forfeit the shares. Remaining shares you reissue. I mean, remaining shares you redeem. That's it. Understood? When the shares are forfeited, in this situation, when the shares are forfeited, there is no concept of reissue. Why, sir? Shares forfeited. Suppose if you reissue the same, we receive amount. Immediately we have to redeem now. Immediately we have to redeem the capital. Yes. Why the concept of reissue? Why the concept of redemption again? That's why. Suppose 1 lakh shares are there, sir. Minus, out of them 1000 shares are forfeited. Forget about these 1000 shares now. No reissue concept now. Straight away redeem 99,000 shares. This is about calls in arrears, students. Next. Replacement of capital, already I said. For the replacement of capital, always consider face value. For replacement of capital, always consider face value. This is very important. Okay. Now, we'll try to solve some problem. Then you can understand the real concept of this replacement of capital and okay, just a minute. Redemption at par. Redemption at par. What is the entry we record? Tell me. Preference share capital account debit to preference share holders account. This is the first entry we record. Preference share capital account debit to preference share holders account. This is the first entry we record. Next one, payment. Preference share holders account debit to bank account. Over. These two entries we record for redemption of preference shares at par. Suppose if the redemption is at premium, then what are the entries we record? Then what are the entries we record? Simple. Look at. Suppose face value 100, redemption at 110. Redemption at 110. Yes, sir. So preference share capital account debit 100, but whereas to the preference shareholders, how much amount I have to pay? 110. Means 10 rupees is loss for me. Yes, sir. This is debit to premium on redemption of preference shares account, debit 10 over. This loss debit to a new account called premium on redemption of preference shares. Premium on redemption of preference shares over. Next, preference shareholders account debit to bank account 110, 110. Now we have loss now. This loss we set off against premium on redemption of preference shares account debit to, just a minute, profit and loss account debit 10 rupees to premium on redemption of preference shares. Premium on redemption of preference shares credit 10 rupees over. These are the entries we record. Along with these entries, if any fresh shares are issued, we have to record the same entries for the same. If any amount is transferred from CRR, then we have to record the same. And when we are transferring reserves now, only free reserves are used. Free reserves are used. Means which reserves, sir? General reserve, P&L account balance, or any other reserve specified in the problem. Don't use CRR account because we are creating CRR now. How can you use CRR? Don't use securities premium account. Don't use capital reserve. Don't use revaluation reserve. Nothing. Only free reserves which are available for distribution of profit. Which are available for distribution of profit must be used for creation of CRR entry. Simple. Free reserves account debit. Free reserves account debit to CRR account over. How much amount is transferred to CRR? That depends on the problem. If total amount is repaid out of profits, then total amount of capital is created, replacement of capital. If some part of the amount is replaced, that part amount is transferred to CRR. Okay. Now look at, we try to solve some problems, then you can understand the concept of this replacement and arrangement of funds. Now look at illustration 1. Hinduja Company Limited had 5,008% redeemable preference shares of 100 each, fully paid, existing shares. The company decided to redeem these preference shares at par by issue of sufficient number of equity shares, 10 each, fully paid up at par. Very simple. Tell me, how much of capital is needed? Replacement. 5,000 preference shares into 100 each. Total we need 5 lakh replacement capital, replacement of capital. And here the what is the method of replacement? Tell me, fresh issue of shares. Now the concept comes, how many number of shares we issue? Simple. How much of capital you need for replacement? 5 lakhs divided by, if the company is issuing shares at par or premium, in both the situations you take face value in the denominator. You take face value in the denominator. So 5 lakhs divided by 10, how much you are getting? 50,000. So how many new shares we issue? 50,000 new shares. If nothing is given, assume they are equity shares. If specific share is given, take the same. Here, which share the company is issuing? The company decided to redeem these preference shares at par by issue of sufficient number of equity shares. Clear? Now tell me, what are the steps involved in this problem? First step, we are issuing new shares. Record the entry for issue of shares. Entry, bank account debit 50,000 shares into issue price 10, 5 lakhs, to equity share capital 5 lakhs. First entry, issue of shares over. Second, record the entry for transferring the amount from capital to shareholders account. So at par now, these entries we have to record. Preference share capital account debit 5,000 shares into 100, 5 lakhs, to preference shareholders account 5 lakhs. Now we are ready to repay the amount. Entry, preference shareholders account debit to bank account 5 lakhs over. 3 entries. 1. Issue of shares. Entry, transfer of preference share capital account balance to preference shareholders. First entry. I mean this one, repayment, this one. Over. Simple. Yes, sir. Now look at, this is our simple problem. So bank account debit 5 lakhs to equity share capital 5 lakh. But the question comes, how many number of shares we issue? Simple. I already said 5 lakh rupee capital we need to replace divided by, if the shares are issued at face value, par or premium. In both the scenarios, you take only face value in the denominator. Then only you will get correct replacement of capital. Simple problem. 50,000 equity shares we issue. Next, 8% redeemable preference share capital account debit to preference shareholders account 5 lakhs 5 lakhs. Over. Next, preference shareholders account debit to bank account 5 lakhs 5 lakhs. Understood this problem? Yes, sir. Now look at illustration 2 once. C Limited had 10,000 10% redeemable preference shares of 100 each. 10,000 10% redeemable preference shares of 100 each. Sir, what is this 10%, sir? It is the rate of dividend. Rate of dividend. Fully paid. The company decided to redeem these preference shares at par. At par. If it is premium, we have a loss. By issue of sufficient number of equity shares of 10 each at a premium of 2 per share. At a premium of 2 per share. Now the question comes, how much capital you need to replace? Replacement of capital. Simple, sir. 10,000 into 100. We get 10 lakhs. 10 lakhs capital you need to replace. For replacement of this capital, how many new equity shares we issue? Sufficient. They used the word sufficient. Sufficient number of equity shares. How many number of equity shares we issue? Face value 100, whereas premium 2 rupees. I already said. If the issue price is 10, I mean face value or premium, here in the denominator, what amount you take? 10 rupees only you have to take. Why? Because if you take 12 rupees here, the capital never be replaced with 10 lakhs. Here the capital is replaced with less than 10 lakhs. That's why always take here 10. Means how many number of shares we issue? 1 lakh. How many number of shares we issue? 1 lakh. Observe carefully. I need to replace 10 lakhs rupee capital. The face value of each share is 10. Now I issue 1 lakh shares. Observe carefully. Here I am issuing how many shares? Tell me. 1 lakh shares. How many number of shares I am issuing? 1 lakh. What is the issue price? 12. Means what is the total amount I receive? The total amount received 12 lakhs, sir. Whereas the amount which is required 10 lakhs, sir. Very good. Out of these 12 lakhs, what is capital portion? What is securities premium portion? What is capital portion and what is securities premium portion? The capital portion is 10 lakhs. Securities premium is 2 lakhs. And how much capital you need for replacement? 10 lakhs. Yes, sir. So the same 10 lakhs is replaced. If you issue less than 1 lakh shares, means capital is not replaced. Capital is not replaced. That's the difference between illustration 1 and 2. Okay. So now look at the entries. Now look at illustration 3. This is just for problem sake. This is just for problem sake. Look at G India Limited had 9,000 10% redeemable preference shares of rupees 10 each. 10% redeemable preference shares. Fully paid up. The company decided to redeem these preference shares at par by the issue of sufficient number of equity shares of rupees 9 each fully paid. 9 each. Sir, 9 means it is a discount, sir. No. The face value of share itself may be 9 rupees. The face value of share itself is 9 rupees. 10 rupees, sir. Generally 10 rupees is the face value, sir. No. There is no constant value of face value. It may be 1 rupee, 2 rupee, 5 rupees, any amount. Face value may be any amount. Is it clear? Yes, sir. Now tell me, what is the replacement of capital? 9,000 into 10. So total 90,000 capital I have to replace. So that how many shares I issue? Forget about issue price. Look at the face value, 9 rupees. So total how many shares I issue now? 10,000 shares. First record the entry for issue of 10,000 shares. After that transfer the preference share capital to preference shareholders account. After that repay the amount. You can check the entries. Now look at illustration 4. This is very very important from concept point of view, not from exam point of view. Concept point of view. Concept point of view. Look at this problem with utmost care. The board of directors of a company decided to issue minimum number of equity shares of rupees 9 to redeem 5 lakh preference shares. To redeem 5 lakh preference shares. The maximum amount of divisible profits available for redemption is 3 lakhs. Maximum amount of divisible profit available for redemption is 3 lakhs. Company is having only 3 lakhs rupee profits. Means remaining amount of capital we replace through what? Issue of shares. Calculate the number of shares to be issued by the company to ensure that the provisions of section 55 are not to be violated. Not to be violated. Very simple, students. Observe carefully. How much of capital I need to replace? Tell me. How much of capital to be replaced? Capital to be replaced. You are redeeming preference shares. Means capital must be replaced. How many preference shares you are going to redeem? How much of amount? Straight away amount is given 5 lakhs. But whereas we have reserves, how much are profits? Nothing but CRR account balance. Those profits we transfer to CRR now. They said maximum profits we have 3 lakhs. And what is the remaining amount of capital to be replaced? Tell me. 2 lakhs. Remaining balance to be replaced. Remaining to be replaced. Total replacement we need 5 lakh. Out of that we are replacing out of profits. Means CRR account we are creating with 3 lakhs. Remaining amount we need 2 lakh. For this 2 lakh na, I have to issue number of shares. So I need to replace more 2 lakhs rupee capital. What is the face value of share? Forget about issue price. Look at the face value of share. Face value of share is 9. So 2 lakhs divided by 9. How much it is coming? 22,222.22. But it is not possible to issue shares in decimals. Take the highest amount. Round figure it to the highest, nearest rupee. Not nearest rupee, highest rupee. Because 22,222.22 na. Take 22,223. Sir, why don't we take 22,222, sir? Okay. You take 22,222 into 9 rupee. How much amount you are getting? 1,99,988. Because here the capital is replaced 2 lakhs. Sir, only 2 rupees, na, sir. Yes, 2 rupees is 2 rupees. That's why take the next higher amount. 22,223 number of shares we issue. Over. Problem completed. Observe. Next question. Also determine the number of shares if the company decides to issue shares in multiples of 50 rupees. Multiples of 50, not rupees, multiples of 50. Multiples of 50 means multiples of 50, nothing but 50, 100, 150, 200, 250, 300. This is called multiples of 50. Here look at 22,223. This is not multiples of 50. Multiples of 50, nothing but what? Divide with 50. Means 22,200 is multiple of 50. 22,200 is multiple of 50. Yes, sir. Multiple of 50. But to issue 22,220 shares now, our capital is not replaced. That's why take to the next highest amount, that is 22,250. If company wants to issue shares in a lot of 50, this is nothing but a lot of 50 shares, then company will issue 22,250 shares. 22,250 shares. This is very important, students. Next. This is the problem. You can check this problem next. Okay. Now, this is very, very important problem. This model of problem we can expect in the exam, students. Observe carefully. X Limited gives you the following information as at 31st March 2023. First, equity and liabilities. Shareholders funds, share capital we have 290, reserves and surplus we have 48,000. Current liabilities, trade payables 56,500. Next information, assets. Property, plant and equipment 345, non-current investments 18,500, current assets, cash and cash equivalents 31,000. Here the problem is on the concept of redemption of preference shares. Now look at the cash balance available. Just 31,000 rupees cash balance is available. Now the share capital of the company consists of 50 each equity shares of 2,25,000, and 100 each preference shares of 65,000 issued on 1/4/2021. So here we have total 2,90,000 na. Out of this 2,25,000 is equity shares, preference shares is 65,000. Total 2,90,000. Yes sir. 65,000 total divided by 100 means 650 shares. 650 shares. 2,25,000 equity shares divided by 50. 2,25,000 divided by 50, we get 4,500 equity shares. Okay sir. Continue. Reserves and surplus comprise profit and loss account balance only. So here we have profit and loss account balance. But observe the problem. If company wants to redeem the preference share, how much of capital should be replaced? 65,000. Whereas observe how much of profits we have, 48,000. Is it possible to redeem the preference shares fully out of profits? Not possible sir. Why? Because capital should be redeemed 65, whereas reserve I have 48,000. So compulsorily I have to issue some new shares. And look at the cash balance also. I have to repay 65, whereas cash balance I have 31,000. Somehow I have to arrange the funds. Yes sir. Look at. In order to facilitate the redemption of preference shares at a premium of 10%, here we are going to redeem the shares at a premium of 10%. Means 65,000 plus 10% means 6,500. 65,000 is liability for us, whereas 6,500 is loss for us. This loss we set off against P&L account balance. Where is the P&L account balance? 45,000. Means out of 45,000, first 6,500 I utilize for set off of loss. Next amount how much I have? 41,500. Out of 48, first 6,500 keep it aside. For what? For set off of loss of 6,500. Next amount how much we have? 41,500. That's it. Next, the company decided, first one, to sell all the investments for 15,000. To sell all the investment, because how much amount we need, tell me? 65,000 plus 6,500. Total amount we need 71,500 na. Capital replaced. Now real concept comes. Capital replaced 65. Capital replacement 65. Whereas this 75,000 is for repayment. Capital replacement 65. Repayment 71,500. Repayment 71,500. Are you able to follow? Now we need total funds, cash 71,500, replacement of capital 65,000. That's the problem. Now they are giving the information about arrangement of funds. Which information they are giving? Observe carefully. So they are giving information for arrangement of funds. How these 71,500 funds is going to be arranged means 71,500. How we are going to arrange? Tell me. We are selling the investments at rupees how much? 15,000. So out of 71,500 I received 15,000 from sale of investment. Can you tell me how much amount of investments we have? 18,500. How much? 18,500. 18,500 worth of investment we sold for how much? 15,000. Means we have a loss of 3,500. Yes sir. That loss we set off against P&L account balance. That loss we set off against P&L account balance. Observe carefully. Means out of 48,000 P&L account balance, 6,500 loss on redemption of preference shares, 3,500 loss on sale of investment. What is the remaining balance we have? 48,000 minus 6,500 minus 3,500. Remaining balance we have only 38,000 rupees in the P&L account balance. Okay, next. To finance part of redemption from company funds subject to leaving a bank balance of 12,000. Means how much bank balance we have total? 31,000 rupees bank balance we have. Out of 31,000, 12,000 leave it in the bank, means remaining 19,000 you can utilize. Remaining 19,000 you can utilize. Means how much of total amount we have? 15,000 sale of investment plus 19,000 company funds. So 19,000 plus 15,000, total 34,000 we have, minus 71,500. Still we need how much? Still we need how much? 37,500 funds we need. Very important, students. Still I need 37,500 rupees funds. For this, how many number of shares I issue? For this, how many number of shares I issue? Look at. To issue minimum equity shares of 50 each share to raise the balance of funds required. What is the balance of funds required? 37,500 divided by, I need 37,500 amount, so that what is the issue price? 50. I need 37,500. This amount I receive when I issue shares, each share at 50 rupees. So that how many shares I issue? How many number of shares I issue? 750 shares. How many number of shares I issue? 750 shares. This is another important concept. Number of shares to be issued, 750. You are required to pass necessary journal entries to record the above transactions. Okay. Now first look at here. I will talk about replacement. Next one, arrangement of funds. You can understand this, the problem completed. Capital replacement needed 65,000. 65,000 capital replacement. Whereas funds needed 75,000. How 75,000? 65,000 plus 6,500. 65,000 plus 6,500. How the capital is going to be replaced? Here I said 750 shares issued. 750 shares issued means each share face value 50. 750 shares into 50. What is the capital replacement here? Only 37,500 capital replaced. Remaining amount 65. We need 27,500 balance, and this amount is used for creation of CRR. This amount we need for creation of CRR. Next, how this amount is going to be arranged? 1. Fresh shares. One is fresh shares. How much amount? 37,500. Next one is remaining amount 34,000. This is internal funds. Internal funds. Fresh shares 37,500. Look at replacement of capital. Now tell me, this is important. For 27,500 we have to create reserve. For 27,500 we have to create CRR. Now tell me the sequence of steps. First, issue the shares. 750 shares you issue. Second, create CRR for 27,500. Second entry. Third, sale of investments. Sale of investment. Third entry. Next, transfer the amount due to the preference shareholders. Next, pay the amount to the preference shareholders. Next, adjust the loss against premium on redemption of preference shares, at the same time loss on sale of investment. For all these things we have to record the entries. For all these things you have to record the entry. This is very complicated problem, students. If you get this problem in the exam now, you have to be very careful. Okay, look at first one. Bank account debit to share application 37,500 already we calculated. Share application to equity share capital 37,500 over. Next, amount due to preference shareholders. Next, sale of investment. Next, transfer of amount to CRR. Next, amount paid to preference shareholders. After that, set off of loss of premium against profit and loss account over. Working note, look at. Already we did this working note. Check this problem twice. Check illustration 5 twice, please, because it is very important problem. Okay, next problem, look at. Yeah, illustration 6. It is fully out of profits. Redemption out of profits. Look at the following or the extracts from the balance sheet of ABC Limited. Share capital 40,000, equity shares of 10 each, fully paid 4 lakhs. 1,000 10% redeemable preference shares 100 each, 1 lakh. Reserves and surplus. Capital reserve 50, securities premium 50, general reserve 75, profit and loss account 75. Can you tell me, here we have 4 reserves. Out of these 4 reserves, how many reserves are free reserves? General reserve and P&L account balance, only free reserves. Okay. For redemption of preference shares, remember we need only free reserves. On 1st January 2023, the board of directors decided to redeem the preference shares at par by utilization of reserve. By utilization of reserve means no fresh shares are issued. Here you may ask, what is the total amount we need? 1 lakh. Reserves amount they have given, but cash amount not given. They did not mention how much cash balance we have. In this scenario, we assume we have sufficient cash. But in the previous problem now, they have given cash balance 31,000. We don't have sufficient cash. We mobilized the cash. But in this problem, they did not mention about cash balance. Means we have sufficient cash. So this problem now, it is redemption of preferences fully out of profits. So what's the replacement of capital? Tell me. Replacement of capital, funds. Replacement of capital 1 lakh. Funds also we need 1 lakh. How you are going to replace the capital? Tell me. By creating CRR. How the CRR is created? By utilizing general reserve and P&L account balance entry. General reserve account debit. General reserve account debit 75,000. Profit and loss account debit 25,000 to CRR account 1 lakh over. Now transfer amount due to preference shareholders. Preference share capital account debit to preference shareholders account 1 lakh. Make the payment. Preference shareholders account debit to bank account 1 lakh over. Very simple problem. Here you need not to worry about funds. Why? Because the funds information is not given. Means we have sufficient funds. Is it clear? Look at. Simple problem. Next. Redemption out of fresh issue and profits. Redemption out of fresh issue and profits. This is just similar to problem number 5. Okay, try to focus this problem. Next, illustration 8 also, redemption out of fresh issue and profits. In all these problems now, please check how much replacement and arrangement of funds. Both are very, very important. Replacement and arrangement of funds. How the funds are generated and how the capital is replaced. These two are very, very important, students. These two are very, very important. Okay. Next one. Illustration 9 also same. All these problems are similar problems. Similar problems. Only the concept you remember is how the capital is replaced by fresh issue of shares or out of profits or combination, and arrangement of funds. Clear? Yes, sir. Now we try to solve the previous attempts questions. First look at June 2024 or May 2024, whatever it may be. Look at. So this is the first attempt in the new syllabus. First attempt in the new syllabus. 6A question and 5C question is really complicated question. These two questions are very complicated. Observe carefully. The following balances appeared in the books of MAC Limited as at 31st December 2023. 80,000 10% preference shares of rupees 100 is 75 paid up. How much? 60 lakh. 2 lakhs equity shares of 100 is fully paid 2 crores. Okay. Securities premium 6.5. Capital redemption reserve 42 lakhs. General reserve 85 lakhs. This is just information. Under the terms of their issue, the preference shares are redeemable on 31st March 2024 at a premium of 5%. Preference shares are going to be redeemed. Preference shares are going to be redeemed. But observe carefully, here the preference shares are partly paid. Common sense. Make them into fully paid. To make them into fully paid, call the final call. Receive the final call. Making the final call. Preference share final call account debit 25 to preference share capital 25. Receive the amount bank account debit 25 to preference share final call 25. Now the preference share capital is fully paid. After that, redemption process. In order to finance In order to finance the redemption, the company makes right issue 60,000. We need funds na 60,000. Yes sir. Equity shares of 100 is at a premium of 10%. 25 being payable on application, 45 including premium on allotment, and the balance on 1st August 2024. The issue was fully subscribed and the allotment made on 1st March 2024. On which date we are going to redeem? Tell me. 31st March 2024. 31st March 2024 we have to repay the amount. The amount due on allotment was duly received by 25th March 2024. The preference shares were redeemed after fulfilling the necessary conditions of Section 55 of the Companies Act 2013. You are required to pass necessary journal entries, including narrations, to give effect to the above arrangement. Also prepare the notes to accounts on share capital, reserves and surplus relevant to the balance sheet immediately after the redemption of preference shares. Ignore date column in the journal. It's a very lengthy problem and this is for 15 marks. But very simple problem. How, sir? Observe carefully. Here we are going to redeem preference shares. First, they are partly paid shares. Make them into fully paid. Make them into fully paid. For that, what is the first entry I record? Preference share final call account debit to preference share capital. 20 lakhs, 20 lakhs. Because how many shares here we have? 80,000. 80,000 into 25. 80,000 into 25, 20 lakhs. Next, we receive that amount 20 lakhs rupee. After this, we think about replacement of capital and arrangement of funds. Tell me how much amount you need for replacement of capital. How much amount you need for replacement of capital? Tell me. 80,000 shares into 100. You need total 80 lakh. You need total 80 lakh capital to be replaced. And what about the funds? 80,000 shares into 105. 105. Because 5% premium, na? 5% premium. 105 rupees we need. I'll discuss two problems because these two problems are complicated problems. May 2024 attempt, June 2024. So 80,000 into 105. 80,000 into 105. How much we are getting? 84 lakhs. 84 lakhs. So this is capital replacement and this is funds arrangement. Funds arrangement. For funds arrangement, what they are doing? They are issuing right shares. How many right shares they are issuing? 60,000. How many right shares they are issuing? 60,000 shares. Face values 100. 10% premium. 10% premium. And this amount also not received in lump sum. In installments we are receiving. How much amount we received? Tell me. 25, 45 and the balance on 1st August 2024. Balance on 1st August 2024. 1st August 2024 means we need to redeem the capital on what date? 31st March 2024. 31st March 2024. But whereas the final call amount is received on what date? 1st August 2024. Means before 31st March 2024. How much amount we received by issue of right shares? You observe. How much amount received? Tell me. 60,000 shares into 25 plus 45. 70 rupees I received. 60,000 into 70 I received, na? 25 plus 45, 70 rupees I received. So 60,000 into 70, I received total 42 lakhs rupee. 42 lakhs rupee I received. But whereas out of this 42 lakh, please check the capital portion and securities premium portion. Capital portion is 60,000. Okay, first to calculate securities premium portion. 60,000 shares into what's the premium? 10%. 100 into 10%, how much? 10 rupees. This premium is received along with allotment, na? Yes sir. 10 means 6 lakhs. 6 lakhs out of 42 lakhs. 6 lakhs is what? Securities premium. Remaining amount 42 minus 6 lakh. Remaining 36 lakhs is capital. Means company issued right shares. By issuing right shares, company received how much? 42 lakh. But out of 42 lakh, what is capital portion? 36 lakhs only. 36 lakhs only. Whereas securities premium portion how much? 6 lakhs. Logic clear? But here I need to replace capital how much? 40 lakh. 40 lakh minus till the date of replacement or till the date of Redemption, how much capital is replaced? Only 36, means we need more, 34 lakhs. How can I take this 34 lakh? Create CRR. Problem completed. Problem completed. That's it. So 36 lakhs is replaced through fresh capital. Remaining 34 lakh we need, not 34, 44. 44 lakh we need from CRR account. CRR account is created from P&L account or general reserve, whatever the account balance they have given. Which reserve they have given? Securities premium, capital redemption reserve, general reserve. General reserve we have huge amount. Okay, next arrangement of funds. Arrangement of funds anyway they have given now. We received some 42 lakh rupee and remaining amount we have in the business. Assume. And this 4 lakhs. 4 lakhs premium is loss. 80,000 shares into 5 rupees. 4 lakhs premium is loss. 4 lakhs premium is loss. This loss we set off against general reserve account balance. This loss we set off against general reserve account balance. So that look at the next entries. Bank account debit 15 lakh. This is application money. Application money. They said ignore the date column. That's why we are not drawing the date column. Next, transfer application money to capital account. Next, allotment amount due. Allotment due on 60,000 shares. A minute. Allotment amount is due. Allotment amount is due on how many shares? On 60,000 shares. 60,000 shares into 45, 27 lakhs. Out of this, what is the capital portion? 21. What is the securities premium? 6 lakh. Tell me, how much capital is replaced? Tell me, 15 plus 21. Total 36 lakhs capital replaced. Remaining 44 lakh we take from general reserve. 44. Total capital replaced? Yes, sir. So start redeeming process. First transfer amount due to preference shareholders. After that, repay the amount. And here we have a loss on 4 lakhs. Now that loss we adjust against general reserve. Over. After that they said notes to accounts. Please check this notes to accounts once. So this is our complicated problem in May 24 attempt. After this, another complicated problem, student, very important model of problem it is. After completion of this, I forgot to charge my MacBook. Just a minute. Hello. Yeah. Now look at important model of problem. See, I see this is given for 10 marks. After completion of this problem, I will wind up. Okay. Now look at this is another important model of problem. Please check it. The following is the abstract of balance sheet of Happy Limited. Happy Limited issued and paid up capital 90,000 equity shares, 9 lakhs. Calls in arrears 20,000. 40,000 equity shares of 10 each, 4 cash paid 2 lakhs, 1 lakh 60. Here we have two classes of share. One is 90,000, another one is 40,000 quantity. Two classes of shares we have. Very important. Look at reserves and surplus. Capital reserve realized in cash 60. Capital redemption reserve 1 lakh 60. Securities premium, general reserve, profit and loss account balance. These are the reserves and surplus account balances. Next, on 1st April 2024, the company makes final call 6 on 40,000 equity shares. Here we have 40,000 equity shares now. Paid up amount is only 4. Now company called remaining 6 rupees. Okay, receive the 6 rupee amount. First, record the entry for called up. Final call, making final call. Entry. Equity share final call account debit 6 rupee to equity share capital 6 rupee. After that, receive 6 rupees amount bank account debit to equity share final call. The call money was received duly on 30th April. First record these two entries. Record these two entries first. Yes, two entries. These two entries we are recording first. Final call and receipt of final call. Over. Next. On 1st May 2024, the board of directors of the company decided 1st May 2024 to forfeit the share on which final call 2 is due. Which one? First class of shares. Look at 90,000 shares. 90,000 shares. 10,000 shares in arrears now. 10,000 shares, on 10,000 shares 2 rupees is arrears. They decided to forfeit the shares. Record the entry for the same, one single entry. How many shares we are going to forfeit? 10,000. What is the unpaid amount? 2. Paid amount 8. What is the entry? Equity share capital account debit 10,000 shares into 10, 1 lakh. 2. Shares forfeiture account 10,000 shares into 8 paid up na 80,000. 2. Calls in arrears 20,000. Over. This is the entry. Forfeiture entry. Very important. Over. Next, what happened? To reissue the forfeited shares at 11 each as fully paid. Here, shares are issued at premium, na reissued at premium. Entry. Bank account debit 11 rupees per share. 2. Share capital 10 rupees. 2. Securities premium 1 rupee per share. Multiply with 10,000 shares. Entry. Bank account debit 10,000 shares into 11. 2. Securities premium. 2. Equity share capital. Over. Yes, sir. Next. After reissue of shares, check. After reissue of shares, now whatever the balance we have in the shares forfeited account, the total amount is transferred to which account? Capital reserve, because all the shares are reissued. Yes, sir. Now transfer that amount to capital reserve. Over. Next, last point. To issue fully paid bonus shares in the ratio of 1 fully paid bonus share for every 2 fully paid shares held. Now look at here, we have two classes of shares. 80,000, 90,000 shares. 90,000 out of 90,000 shares, 10,000 shares are forfeited. Again reissued, means total 90,000. Plus 40,000 shares also fully paid. Yes, sir. 90,000 plus 40,000. How many shares? 1,30,000 shares. 1,30,000. Existing number of shares total we have 1,30,000. What is the bonus ratio? 1:2. Fully paid share, 1 fully paid share. 1:2 means 1/2. So how many bonus shares we are going to issue? 65 into 10 rupees. So 6,50,000 we need. 6,50,000 we need. How we arrange? These are bonus shares na. So first take capital reserve balance. Yes, sir. Capital reserve balance 1,60,000. Next you can take securities premium. Yes, sir. 1 lakh securities premium. Next you can take capital reserve. Why? Because they said it is realized in cash. Yes, sir. 161, 260 plus 60, 320. Remaining amount you can take it from general reserve. Till you need some amount, take it from P&L account balance. This is a sequence of steps. Sequence of steps. Look at capital reserve, securities premium, capital redemption reserve, general reserve, P&L account balance. Total 6.5 lakh. Now issue bonus shares. Bonus to shareholders account debit to share capital account 6,50,000. Over. Working note. Simple problem, but very logical problem. That's it, students. So this is the concept of issue, forfeiture and reissue of shares, plus bonus and right issue completed, redemption of preference shares. Sometimes I already said you may not get exclusive problem on bonus shares and redemption of preference shares. These two concepts may be merged with the issue of shares. That's why these three chapters you have to study as one chapter. Okay, so remaining you can check the remaining questions. Remaining questions are little bit easy. As this is the first attempt in the new scheme, that's why they have asked this much of conceptual questions. And this model of question already we have in the study material also. You try to refer the same. Is it clear, students? That's it. So again we have one more session in the evening, 8 to 10 or 10:30. There I will discuss issue of debentures and redemption of debentures. That is also very important concept. Altogether from company accounts we may cover 25 marks. I said yesterday already, spend with me 5 to 6 hours time so that you can attempt easily for 25 marks. Is it clear, students? Yes. So we meet again in the evening class. Don't forget to join at sharp 8 o'clock in the evening, because tomorrow we don't have any class. Tomorrow afternoon you are having exam now. So that's it. So all the best in advance. Once again I will wish the evening class again. And meantime you please study these questions once, and partnership also you study. I already said some marathon is already uploaded, part 1 part 2 marathon uploaded in the Shrestha YouTube channel, and this is company accounts. Is it clear, students? That's it. We meet again in the evening class. Till then, bye bye everyone.